What up, everybody? It's your man Dame D NYDC. It's two mics up, ladies and gentlemen. It's Wednesday night. We back live, man. I know been going for a little while, but I'm glad you all are here tonight joining us. And I cannot even begin to share the level of excitement. Man, look, we talking about educating, empowering, and positively impacting our community with tonight's conversation. I have three amazing guests. And when I say amazing, these gentlemen are incredible. And I want to put the emphasis on gentlemen and incredible. It's very rare that you get four men on a conversation coming to you live talking about something that's really, impactful to many of us, when it comes to buying homes, buying real estate, getting that needed insurance. And these gentlemen are going to go ahead, man, and they're going to really liven up things, that's for sure. But really do it in fun and really do it in a manner that really makes it easy for newcomers, old comers to really get a better understanding of today's real estate and insurance market. And I am just so proud. I've known these gentlemen, one is like definitely like family. One of our sponsors here, as you can see, being brought to you tonight by TD3 Insurance. But Chris and Sean, I've also gotten to know, it's been maybe about 10 years now, give or take, going back to our BNI, early BNI days and our early connections. So I'm proud and honored to bring the three together because they too have a podcast, CSC Podcast, all things real estate and insurance, man, and they really blowing it up. And I'm proud to have them. So without further ado, and without me keep talking and dragging out this intro, I'm going to bring to you CSC Podcast, Mr. Christopher Logan. Thank you, Chris, for being here tonight.
Absolutely.
My man, Sean Andrews. Got to have Sean Andrews here with the energy.
Thank you.
Last but definitely not least, my man, Mr. Clifton Durham. Cliff, what's happening, brother? How you doing?
What's going on, Dame? Two Mike's World. What's going on?
Oh, man. Hey, look, this is one family here tonight. All right. So
absolutely.
You gentlemen are amazing. Like I said, it's very rare that we get to see this. Like I said, four men of color coming together and really bringing about conversations that are educational, they're empowering and impactful. But before we really get into what CSC is all about, I always have to start with each one of you as individuals. And I'm going to start up at the top, from my screen, Mr. Christopher Logan, RE Max Allegiance. Man, give us a little background about yourself and who you are.
Sure. So, one of the funniest stories about me is I always like to tell people that I absolutely came kicking and screaming into real estate. Both of my parents were real estate agents. My father for over 30 years. My mother's still licensed. And I knew I wanted to avoid two things. Didn't want to go into the military like my dad and climb in the mud. I didn't want to be a real estate agent. But my dad had some medical issues, needed some help back in 2000 when I was in retail. And that's how I got into it. And I haven't looked back, and I've loved it every single day. 55-year-old military brat, licensed in Virginia and Maryland. Absolutely love what I do. I'm an operations person that sells real estate, and it's benefited me well.
Man, I love it, man. And thank you, Chris, for taking time out, man, to be here tonight, man. I really appreciate
thank you.
Yes. And as I like to say, because no matter how you cut it, Sean, you always the man in the middle. You carrying the S of this right here. So we're going to go ahead. We're going to jump in. Man, give us some background about who Sean Andrews is, man. Who's the person?
All right. I appreciate the opportunity, Dame. Okay, I'm Sean Andrews. I currently work with Potomac Mortgage Advisors, and I've been in the mortgage industry since 1992, okay? I started out, my father's best friend had a mortgage company. He came to me one day, hey, you want to get into the white collar world? I said, of course. And he taught me from point one all the way through. Started as a processor, been an underwriter, owned a company, ran a company, and all the way through to today. Wow. So that's what got me in the business, and I love it. I can't, it's never a day of work. I can't imagine doing anything else.
I can dig that. I love that. Last but not least, the second C or the first C, depending on what day of the week it is when you watch them, ladies and gentlemen, and make sure you check them out, man. We're going to talk about it, but our friend and, one of our advertising partners here, two mics up, Mr. Clifton Durham, man. Give him a little about yourself, brother.
What's going on, man? I'm Clifton Durham, TD3 Insurance Agency and Associates. I am all things insurance. All right. I started out in the insurance world, man. It's like it's been a quick start. It's been only about 7 years, right?
Wow.
Came from the wireless industry that I was in for about 15 years, and I made a change, a career path, because my aunt was with Allstate for about 35 years, so I always
Wow.
had family. Shout out to my Doris down in Florida. I always had family in the insurance game, and one of my good friends really. He really said, Cliff, you need to get into the insurance world. I said, I have family in it, but I was in love with wireless, in love with it. Now I feel like, my son had took it over now, so it's pretty dope watching him do it. And I got into the insurance world, man, and just rocked it off from them, because to me, you never sell the product, you sell customer service, right? So to me, it was never about the product. It's just if it gave me a passion, enabled me to take care of my customers, is something that I wanted to do. And man, when I got into it, it just exploded. I love what I'm doing. Like Sean said, I don't even call it work. I wake up and I grind with a smile and grind with fun, and
That's right.
Coming from New York, they said if you can make it in New York, you can make it anywhere. So I came down to the DMV to make my print, and we're just doing big things, and I'm happy, man.
Yeah, you gentlemen are definitely doing big things. And look, ladies and gentlemen, I see you in the weeds. Thank you for joining us. Drop a comment. Let us know where you're coming from or watching us from. If you have any questions, please do not be afraid to drop a comment. We want to make this as interactive and educational for you as well. And thank you for being here this evening. So, gentlemen, I want to transition because I'm really curious to know. I have some insight, as to what, CSC is. But let's start from the inception. What is, the CSC podcast, and how did it all come about? And, I see Chris leaning in. So, Chris, I got to just your body language. I got to start with you.
We have our individual body language, Cliff, I like Cliff. Cliff, you can tell he's got something good because he does the pop. I lean in, and you can just Sean. He just exudes that energy, right? Chopping at the bit. So as far as the podcast, it kind of gave me chills when you talked about in the intro. We talked about what our mission was, and we talked about wanting to educate and empower, and that's what you said. And we didn't even talk about that, and that's exactly what it is. But we talked about doing something to bring the information to the people for probably almost over a year, maybe a year and a half, trying to figure out how to get a studio and get a script and record it and editing. And then one day we just said, you know what, let's just go live. Right. As terrifying as it is, we want to do this. It needs to get out here. And we just went live with our first broadcast, and we've grown from there. But it all started with wanting us to, educate and empower people, but do it a little bit different. Have fun, go off of our energy, but still give people information that they can use.
I love that. So I got to go back then because, like I said, Cliff got that bop. Cliff, so I see you. Anything you want to add, or was there anything from your perspective, outside of that you felt, that you could bring, to CSC that would really make it special and pop?
Well, I mean, first off, it's just the brotherhood that we have. Met these gentlemen years ago, right? And how it started is I went to a network event at shout out to Bar Louie over there in Potomac, Stonebridge, out in over by the Wegmans. Liberty Mutual, shout out to them. They were real big on doing networking, right? So I went out to Bar Louie just to network and meet some people. And Chris, if you don't know Chris is an outgoing brother, right?
Right.
If you look like you're about something, if you have something to represent, and he'll definitely come and pick your brain. If he likes what he sees, he's going to talk to you, invite you to a few more events. He's the type that, listen, if I got something going on, I'm going to bring my brothers on with me. Right. So we met, clicked, we talked for hours, at Bar Louie and got it going on. He said, listen, I got a brother who's a mortgage lender, because Chris is the realtor that I want you to meet. His name is Sean.
Right.
I met Sean, same energy, good brothers, right? And then in the insurance world, it's real big. If you're an insurance agent, your top referral partners is always a realtor and a mortgage lender. And it was just perfect, right? So once I knew that was my niche, I got with the fellas. I had a few networking community events. and they came out and supported with me. And they said yes with no doubt, and came and stood with me the whole time. They brought a few. What I really like this, they brought in a few flyers and business cards on their own, but they was representing me with insurance. It wasn't about them. Since it was my event, they made it about Cliff, and I was like, these dudes got my back, you know. And
absolutely.
Since then, we went to BNI networking groups, and I mean, man, now we're just the three. We're unstoppable in this game.
Right.
Definitely a Three Amigos show. I can't leave you out, man, because I want to give you some input, because I know you got some input.
Right. Yeah. I mean, so piggyback on what those both have said, and you know, from my perspective as well, is, you know, I kind of want us to be the resource. You know what I mean? The go-to resource. You know, that's why we try to stay consistent every week. So when people think of a realtor, think of a mortgage person, or think of their insurance, they think of us first, or at least close to first. You know, I just want to be a resource, and I believe us three as how we are together, we just fit, we just meld, we just mesh. You know, and I think that authenticity rubs off. At least I hope it does.
No, it does. I mean, you guys from day one, you know, like Cliff said, you know, my first impression were, you know, givers. You know, always very supportive. You've always been very supportive, very helpful. You gentlemen are very knowledgeable in what it is that you do, and I think that really helps push, you know, the needle, if you will, in that authentic way that you guys come across, in the way that you carry yourselves. And that is probably part of the reason why, if I can speak freely, you know, why you've been able to achieve, you know, the levels of success, you know, that you have. But that also makes me ask then, you know, so now that you started, you know, everything kind of grows in cycles, if you will. You know, you start out with a mission, you know, a vision, and then there's an ultimate goal. So what is, you know, if you will, the mission, the vision, and what do you see as the ultimate goal? And I'll let each of you, you know, answer one. I'll start with, you know, maybe Cliff. You know, what is the mission, you know, overall for you and CSC?
The mission, I feel, for us is about educating the masses, right, on real estate and insurance. Along with that, letting the customers know you have a group of gentlemen that strive for the same thing, is that giving that comfortability to the customer, whether they're buying a house, refining a house, purchasing insurance, that is a one-stop shop. And each one of us have your back during the whole process, even once the process is closed, the follow-up, that we are there, right? And to really expand the brand as from podcasts, you know, to different shows, also introducing people like us in this industry. All right, something that you don't see as much, and getting giving opportunities to others that want to be in this insurance, real estate, financial world, because it's big. It's not going nowhere. It definitely is a need. It's not a want. You gotta have it. And when you got three fellas that are joint like that and think on the same wave, man, you know, that's just something we want to keep accomplishing. You know what I mean?
I love that.
And see if other people will follow suit, right?
And that's the goal. You know, you can only lead a horse to, you know, to water, right? They have to really do the rest. But I love, you know, helping leading them and getting them there is really important. So Sean, you know, as far as the vision of CSC, what do you see as the vision for you gentlemen?
Sure. I'll piggyback a little bit what Cliff said. Again, you know, the vision, how I see it, is the one-stop shop. Okay, you know, for people to, you know, when they want to buy a home, need to buy a home, they think of us, and we want to be able to be that conduit, you know, to get you there. You know, that's the vision I see, and I also feel like, you know, we get large like you, right? You know, your footsteps, and, you know, and just grow it throughout the country, or however far it's going to take us to be that resource for people.
I love that. And you guys will definitely get there. I mean, you're on your way. You're doing your thing. I see you on Thursdays, you know, and we're going to talk about that Thursdays at noon, ladies and gentlemen. So in the background, we're going to get to it. So Sean, last but not least on this one here, the overall goal. You know, you guys, you know, started out slow. You've been building up, you know, and I lost count. Now I'm going to be honest with you. You know, you guys are growing. You're in what, season 4 or season 5, I believe it. 4. Man, look at this here, boy. Time's rolling. So what's the overall goal then? You know, now that you guys have really gotten your foot wet and have really been building on each season and building on your repertoire, what is the overall goal that you see?
Yeah, I mean, I don't necessarily know if the goal changes so much. I'll give you the canned answer, right?
Okay.
We talked about educating and empowering our followers with information and industry updates so they can make the best decisions for their family, right?
Right.
So, but I think to reach as many people as we can, we talk about people of color that don't have access to information all the time,
Mm,
right? But
mm,
also, as Sean said, as a resource. So by expanding our platform and being fortunate enough to be invited onto a platform like yours, it allows us to reach more people. We never once at the inception said, hey, the end result is money, right?
right.
It's more about, as we know, if we give and we give and we put out there information that people need, that will happen organically.
Mm,
Right.
So I think that's our mission. Us growing our platform only allows us to help more people.
mm.
Absolutely.
That's very well said, and I think again that lies at the core of what you all are about. And I want to change lanes kind of and really start diving into each and every one of you. But I'm curious because this is one of the questions that my team and we sat around and we threw out. As an insurance agent, right? Cliff, how can you effectively, or how have you been able to effectively partner, if you will, with a mortgage lender such as Sean, to provide, really those comprehensive solutions, if you will, for today's home buyer? Because even home buying has kind of changed,
Absolutely.
in the not even the last couple of years. We're talking about the last couple of months, really.
Absolutely.
So I'm just curious to know, as an insurance, agent, how does that work with a mortgage lender?
Well, with the mortgage lender, you get approved for a certain amount, right? And you have to be under that amount. You can't be over, otherwise the deal won't close and you lose the deal. So as soon as Sean has a client that he needs to get clear to close, there's certain contingencies that that Sean will need. So Sean will call, give me a call, Cliff. I have a client. This is how much the loan is. This is where their insurance needs to be at. And if they need flood insurance or if they need any additional that is required for the mortgage company, now what I'm doing is doing my research on the home, right? Finding out the market value, which market value means how much it will cost if your home, God forbid, you had to rebuild it from the ground up due to an accident. How much would that coverage be compared to how much the loan be, right? Because market value and the loan that you're getting is apple and oranges. Apple and oranges, because you got to meet the number that the mortgage company wants you to meet. At the same time, you have to explain the difference to the client, what market value is and versus the loan. Your loan could be for $500,000, right? But the loan is getting the appraisal from all around the house, the property. And Sean could answer this better if it's inside the house, whatever all the appraised cost is. My job is to make sure they have the correct replacement costs. I never want to overcharge a customer. I think as an insurance agent, it's kind of funny. As an insurance agent, one battle you have with the mortgage company is the replacement costs, because the mortgage company wants to make sure that their loan is protected, right? Which I understand. But however, since the market value is so different, it's a different cost from the actual loan. It's usually lower than what the loan is. So you want to base the price off of that for the customer. However, that mortgage company is like, no, that's a little too low. Something happens to this home, I want to make sure I'm protected. Right now, you got to match that, and you got to satisfy the mortgage company with one premium. You got to satisfy with their monthly costs, to bring it all together.
Absolutely.
So that is the most deep part that I start off with. After that, usually I go over line by line with the customer of what they get as far as coverage. Do they need it? Do they need it at a certain amount? They need it lowered. But that replacement cost is what's really, really important.
Absolutely.
So that just makes me then have to move and start at the head of the train sometimes, I guess, if you will, with Sean, you really have a lot of factors, I guess, if you will, that, you as a mortgage advisor or you're really dealing with, right? And, when dealing with new clients, what are some of the most important factors, you consider, maybe when evaluating, a mortgage application?
Absolutely. Good question. So basically, we'll take a first-time home buyer. So my biggest thing when they first come in, I like to, ask them what are their dreams and aspirations, right? What are they looking for to get out of this? Okay, what's their budget? What do they want to pay? So there's a difference between what you want to pay and what you can pay, right? So we want to get that out of the way. And then I'm a little old school. I'm very old school. I like to get the application and I like to really input the information myself. You may know a lot of people now have the online apps and those kind of things, which are great if that's what you want to do. But sometimes you miss some things, right? Versus me asking you the question, because I know what I'm looking to hear from you. So versus just throwing an application out there, I like to basically input everything myself, and then I can ask the question. So there's no surprises going down the road. When people do online applications, sometimes they don't complete it correctly. You want to ask the questions. Hey, is there any child support out there? Is there a tax lien? What you got going on out there other than what you're telling me or what you're putting on the application? So, and also I just want to say, there's a lot of those apps out there that you can say you can buy a house, on your phone, get pre-qualified. But that's not real. Okay. It's a great marketing tool. The people that do it, they're great marketers. It hasn't gone to the phones, but in the end, they're calling a Sean, they're calling a Chris, they're calling a Cliff because you can't do it over the phone.
Facts.
You know what I mean? So
that's crazy. So, you actually telling me that these actual apps don't even work, huh?
Not the end. What it does, it gets you to call them first. You think about it. It's almost like a trigger lead almost. You're going to put the most money out there to call that company, and then we'll break it down from there. Okay. But after they've already picked you, then a lot of people don't want to switch, so they'll go down the road with you, even if you didn't lie to them. You know what I mean?
Hey, Ken, before you go to Chris real quick, I was on TikTok and they was promoting, and the guy had a Bentley that he got in an accident with. And he held up the phone and said, I just got a good thing that my insurance is cheap, that I could cover this accident. And he had the app on his phone that said, I'm paying $35.99 per month. I said, what? If I wasn't, worried about being sued or anything like, I would have forwarded that. Be like, this guy's
wow. Are you serious? That is crazy. So I'm going to shift gears, like you said, because I'm going to bounce to Chris real quick.
Sure.
Because again, we're talking about factors here, right? Again, I want to try to touch on the factors first. For you as a realtor, what are some of the most important factors? Like, you've maybe either had to educate buyers on or what they should consider. Whether it be choosing a neighborhood or a location or things of that nature that probably some of us may overlook, when we're purchasing a home.
Sure. It goes back to Sean a little bit, and we talk about this on our podcast. I always start with the financing first. As we all know here in the DMV, where a person lives has a lot to do with either affordability or commute, right?
Yeah.
So one of the first things I do, especially for people out of town, is I send them to Sean. So let's find out there's two different things. There's your budget, what you're comfortable with, and what you can get approved for, right?
Okay.
Let's find that out. And then we drill down on the neighborhood. And, and my job is not necessarily to tell someone what house to buy, right? My job is to use my knowledge and expertise to guide them, right? It's not my job to say, I can't stand these paint colors. It's not my job to say, I can't stand which way the front door is facing, but it is my job to point out functionality things and potential resale items, right? Do you have a 50-foot retaining wall? Well, 5 years when you call me, then we may have to address that retaining wall. So when it comes to, your original question was about neighborhoods and things of that nature. The first thing is affordability, right? Second thing is, does this home fit your current, short-term, and long-term needs? And then we go from there. And my dad used to say, the reason that you get approved is so that you don't fall in love with a house that you can't afford, and also so that you don't pass up on one that you can. And that's why I like to start with Sean first.
Okay. I love it. I'm sitting here just thinking, I'm thinking back when I first started looking at homes. None of this was on my checklist. Like, Just being honest, right?
Right.
And I guess really I want to speak, to those who are new, from a collective. What are some of the things that, you know, is there a checklist or something that people should really be working on or really coming to? Because I want them to be knowledgeable, because when I first came in, it was kind of mind blowing because I felt defeated initially because I didn't know. So, like, is there some type of checklist or something like, from you guys, from your perspective, is that something that maybe you share with clients or potential buyers? Does it start at one end or the other, or is it just a thing where you kind of use your skill set to refer your clients back and forth, maybe let's say between Sean or Cliff or Chris to find that information?
Sure. I'll jump in real
Yeah,
quick.
sure, go
Okay.
ahead.
So basically, how I look at it, there is a checklist, of course. Yes. We all do seminars. We all do these types of things that I do have checklists, the process of the follow the process to get to your home. Absolutely. So again, you want to interview the person, feel how, everybody's different. The way that you intake knowledge is different than the next person. So what do they say, Chris? We're also therapists at some point.
Absolutely.
Chris can tell you're going through a divorce. That's a whole different thing. There's different
Mhm.
things. But yes, to answer your question up front, we do have lists and checklists of what to do. But I think it's more of evaluating the person, their situation, how to get them that information.
Yeah, how to get them that information. So I'm going to jump in. We got a question here. G Wade, what's happening, brother, man? Thank you for joining us tonight. Another, member of the Mogul TV family. The
All
Floor
right.
is Yours podcast. Check him out, man. Thank you for joining us tonight. But he asked a great question. Can you talk about the 40% rule that lenders look at as far as home expenses?
Great question. Okay, so this is called a qualified mortgage. That's probably what he's talking about. And that 40% is the debt to income ratio. So what that means is you take what your income is, okay, it's $10,000 a month, and then you divide that by the mortgage and your other expenses, revolving expenses, okay, credit cards, car payments. And typically for a qualified mortgage, they wanted that number to be 40%. So if you make 10,000, they want to be 4,000, right? It's 40%. Right. That's called a qualified mortgage. But there's a caveat to that, just so you know. We as lenders go through desktop underwriting, which is it's a system. Before it actually gets to the underwriter, we run first to see, hey, are you going to be qualified for this? Because you can be, so I'll put it like this. You can have a 750 credit score, right, and $1 million in the bank, okay? Or a lot of money in the bank. Okay. And that 40%, you can get to 45, 48, 49. Now, if you're a 620 borrower with no money in the bank and your credit cards are all maxed, 40% is where you're going to be at. So it's a lot of it case by case, but he's correct when he sees that 40%. That's for the qualified mortgage. Yes.
Qualified mortgage.
And Sean, they call that, when the mortgage and their existing bills, we call that the back end ratio, right?
Back ratio, yes. That's at 40%. So there's a front end, good job, Chris. There's a front end and a back end. If you were to Google what are ratios, you're going to see the standard 28-36. 28% of your money goes towards the payment only, and then 36% of your money goes to the payment and your debts. But now they talk about a qualified mortgage, which will go to 40%. But I'm going to tell you, depending on the program, okay, you can go higher.
Okay. Man, look, great question, G Wade, man. I appreciate you, man, for the question. But that just makes me think then too, Sean. I'm just going to piggyback because now that has me kind of thinking about interest rates, right? Yeah. So, I mean, we all know that these rates.
The Fed's open,
man. These recent changes, right? Interest rates in the housing market, conditions, how have they really impacted, I guess the application process then for mortgages?
Sure.
What are you seeing?
So what I'm seeing, I'll just use Chris and I, Cliff, because we do a lot of business together. We have the we have the borrowers, we have the people. Okay. They want to buy. So people still want to buy, even though it's tougher for them. Okay. Chris is working with one now. That person we get a couple of years ago at a $400,000 house, that same payment is untouchable now.
Right.
Just
Right.
because the rate has basically doubled.
Right.
You know what I
Right.
mean? In a short amount of time. Now, having said that, we still have buyers. They do it more for need now, more than one. Okay, my job is getting. I got a new job. I got to move to wherever. Right. But and Chris can probably answer more of this. The clients he's getting, but to just say, hey, I want to go buy a house in this market, I'm not too sure about that. Now, refinance wise, who's going to refinance a 3% interest rate, right? That's not happening. But what is happening, which is a silver lining here, is HELOCs, home equity lines of credit, doing several of those because people still want to take some cash out, send their kid to school, go on vacation, do these things, so they're able to get a big credit card basically and go do those things.
Yeah. Whew, man, you ain't about. Go ahead, Sean.
Yeah, Sean brought up a real good point. Back when with the pandemic, we had those rates in the low twos, in the low, upper twos and lows threes. Yep. You had people buying their forever home when they didn't necessarily need. The typical graduation is you rent, you buy a condo, maybe you buy a townhouse, maybe you buy a single detached home, and so on. But you had people buying much larger homes because where the payment was, right? Maybe they didn't need it, or maybe they weren't necessarily need to buy, but they wanted to. Whereas now it's gone to we like to talk about the compelling reason to buy. Those are your buyers that are out there now. Maybe they wanted to wait for rates to go down, or thought rates were going to go down, or they thought prices were going to go down. But now they're compelling reason to buy. Job relocation. Maybe they've grown their family outside of the home that they're in. Right? Maybe there's a school they want to move to a school. So that compelling reason to buy supersedes where the rates are now, right? And and although they are higher than what they have been, Sean can attest, I wouldn't say they're necessarily at historical highs. I remember my wife and I bought our first home back in 2007. I remember getting a 6.75, 7.1. I remember thinking I was stealing, right? And Sean, when you bought your first home, right, what was your rate?
9%. 1996, 9%.
Wow.
We're not there. We're close, but we're not there yet.
Yeah.
Wow.
Yeah.
So, I wouldn't let interest rates, stop anybody if you have a compelling reason to buy. And we'll talk about some of this later on about, the things that you can do. But interest rates, prices are going up. A buyer can do things to offset the rate. We can talk about buy downs, ARMs, working on your credit to get a better rate. But most buyers, most consumers cannot affect the pricing, right? You can't affect the price of your neighborhood. So that's why I think that's the bigger challenge. And that's why I think if you have a compelling reason to buy, don't let interest rates alone be the reason you stay on the fence.
Fair enough.
Let me piggyback real quick regarding escrows and insurance. Okay, so Chris was just talking about other ways to lessen your payment. Okay, so you cannot escrow. What does that mean? That means you can pay your own if you have the wherewithal and you got to do it. Pay your own insurance and taxes. Okay, it's due twice a year, so that's not. Even though you get qualified with that payment, you're not actually making that monthly payment with that insurance, homeowners, and your taxes. So there's ways to limit your monthly output. I'm working right now with Cliff with the deal. He saved our borrower with $1,300. It's because that was I need. Hey, Cliff. Hey, look, my ratio's high. I'm getting a DU refer. And she wants to close on Friday. What are we going to do? So Chris went to the lab and made it work for us. So you have to. You have to give and take like that because everything's high. Rates are high, prices are high for homes.
Everything's high.
Insurance is high.
Yeah, and that's not a percentage saving. $1,300 a year. That's over $100 per month. That goes directly less than your payment.
Yeah.
And check this out. The secret sauce to that, right, is everybody's used to the big box names, your big carrier's name, right? But there are other A+ carrier insurance companies that are watching the hikes from your bigger companies and trying to figure out a game plan on how to take care of customers and step into the lineup of offering their home product, right? So you have some companies now, like the customer that Sean's talking about, she lives near the water, okay? And your companies right now, you live near the water, or if you have water claims, anything with the word water in it, you're gonna pay extra. So now you got a company that's all they dedicate their insurance protection to is to customers that live by the water. So that's what I did. when you do your search, the good thing about being a broker is options, right? So I work with different companies that will benefit the customer. And that's what it's about, especially right now, because rates is up even on the insurance side. Rates is crazy, but the rates go up on the insurance side basically because of the risk everywhere.
Right.
Well,
because of a certain amount of claims, and it's rated by your county. It's
right.
not rated on you. It's rated by the county. Yep.
You pay for everybody else's mistakes.
I understand that.
Hey, Dave, I like your boy Gerard's. His high blood pressure is even high.
Yeah, that's what I say. Look here, man. I mean, look, air is high. Everything is high. It costs money to breathe. But
Right.
I want to go back because G did ask a question too, though. When you were talking about HELOCs, wanted to know what's the best HELOC product maybe you have to offer.
Okay, great question. Okay, so there are HELOCs, which stands for Home Equity Line of Credit, which is essentially like a big credit card, meaning you're only paying on what you use. Let me give an example. If you have a $100,000 line of credit, but you only use 30,000 of it, that's what your interest-only payment is a month. Interest only. So if it's a 10% rate, you're only paying the interest, no principal. Okay, like a credit card. Okay, there's also closed-in fixed seconds. Okay, that means there's no fluctuation, especially when it's kind of rate environment. Some people would prefer a fixed second, so they know next month or next time the Fed talks, the rates aren't going to go up. Okay, but then I have borrowers, they want the flexibility. Now I want to pay that down and keep using it because with a closed-in second, you get all the money up front. That's it. You pay it down like a regular loan. Okay, so there's really no flexibility, but you take care of your need. You know what I mean?
Right.
But we have every product to basically fit your need. You know what I mean? If you want the HELOC, which I prefer a HELOC myself because it gives you that flexibility. You pay down the HELOC and you still use it. It's still there for you.
Basically it's a credit card, like you said. Basically,
absolutely.
Yeah, I saw you, Chris. You look like you had wanted to add on a piggyback something.
I was reading the questions in the chat, and I was thinking, Chris, AJ, thank me for answering this question. I didn't even see the question, but he did talk about, is this the new normal, right? I think that's a fantastic question. I would say this is the new normal for right now, right? And a lot of times people say, well, I want the old rates back, and sometimes my flippant answer is, well, do you want another worldwide pandemic? Right? Do you want another recession? And do you remember what that looked and felt like? So the reality is we don't want that, but we do, it would be great to have a little bit of easing, right? So, but I would say, and Sean would probably concur, I would say probably between now and the end of the year, I wouldn't look for a significant reduction in rates, right? So, do your planning, meet with somebody like Sean. And there's nothing wrong with having Sean qualify you today, even if you think you're 6 or 12 months out, because to your original question, Damon, that helps you figure out where you can buy ahead of time. Once you know the amount, then I can start setting up a couple of automatic searches for you and see things while I'm out there to kind of help us narrow down that place. So you don't have to be, first of all, you never have to be action oriented to call any of us, but you don't have to be ready to buy today to at least know what you can buy now and then start to narrow down your neighborhoods.
I love it. So we're gonna jump into we got some great questions here tonight. So I'm gonna go back. Jennifer, good evening. Thanks for joining us. Hey, look here, gentlemen. Be nice.
I saw Jennifer.
You're saying this woman handles my taxes, so make sure. No, just kidding. Jen is asking. This is very informative and right on time. She's in the market for purchasing. So her question is, how many lenders should she apply to? For a great comparison.
Okay, I'll take that. So it almost depends on. I would almost ask, why would you go to more than one, right? Okay, are you going to more than one just to compare? That's fair, because I have people that send me stuff that they're using somebody else. So I would maybe do one or two, right? Myself and somebody else, because in the end of the day, we all do the same thing. You know what I mean? My rate's not going to be that much different from this guy's rate. Okay. Now, how I explain it to you, there's other ways to lower some things. That's where the expertise comes into. Okay. That's where our experience, none of us are order takers. as you know, like when the rates drop, everybody wants to refinance, buy a house. Then you got everybody jumping into everybody's a realtor, everybody's a mortgage person till today, right? And they leave because they're order takers. Where Chris, Cliff, and I, we can actually sit back. Okay, look, I'm going to give you the whole thing. Chris will call me and say, "Hey, Sean, can you give me 15 fee estimates?" Okay, because we want to be right on time with you. Where somebody else will just say, give you the lowest cost estimate, but then you go to close it, it's not that number.
Right.
Okay. So to answer your question, Jennifer, once you get a relationship with somebody you feel comfortable with, trust them. Okay. Trust them to take care of you.
Yeah. You already found one. You only need one.
There you go. Because why is that though? Why, Damon? Just like yourself, all three of us. It's our reputation.
It is, exactly.
Okay. When one bad deal can blow it all up. So none of us want that to happen.
Yeah.
And Sean, I think I might want to also touch on, the implications or the impact of having your credit pulled multiple times, right? In general, with a mortgage, getting your credit pulled for the purpose of buying a home is one of the least impactful things. But getting it run multiple times as you're shopping around once and then 30 days later, that could possibly have a negative impact, right?
Absolutely, it can. So to clarify, it's not like you're going to buy a car, right? When you're hitting every car lot, digging your credit. There's a window, 30-day, 60-day window when they know you're shopping for a mortgage. Okay, it's not the same impact like Chris is saying when you pull that trigger to do it. But again, you have to ask yourself, why are you going to somebody else other than just to keep them honest? I have people now, Chris will say, hey, they're going to use a builder. Okay, but what do you think about this loan estimate? Right? I'm not getting the business. He's getting the business, but I'm going to say, hey, you know what? This looks okay or it doesn't. Right. You know what I mean? But it's actually another professional opinion. That's what people like Jennifer should do. You don't really have to go way out, keep going. I'm applying here, I'm applying there, I'm applying. You don't really need to do all that because in the end, we all do the same thing. It's going to be very close.
Okay. Fair enough. So Jennifer, I hope that answers your question. I mean, of course, you can always reach out to these gentlemen. We could chop it up. We could talk, give you the best guidance as possible. But that was a great question. So my man Gerard, he had put in the comments, he's trying to see the best option if he wanted to do a flip and sell within 3 to 6 months. So I don't know, like Chris or you guys, like how often.
Take that.
Okay. We doing it your way.
Who, the Chris, right?
Yeah.
Flip and sell. Yes. Yeah. So I actually just had a conversation. No, I went deep on that. I actually had a conversation today with somebody about whether or not about flipping and selling in 3 to 6 months. So if flipping, I don't think it matters from a 3 to 6 standpoint, other than Sean's seasoning aspect of it. You really want to do most of your heavy lifting in the very beginning. Look at your ROI. Look at how much you're going to put into the property. Look at your rental income and also why are you purchasing it in the first place? But I think if you do want to do a purchase, do the return and do the flip in 6 months, I don't think you're going to have a challenge. Obviously, there's cost to sell on the front side and cost to sell on the back side. So when I'm working with investors, I like to look at both of them, right? The front side and the back side. But I don't think necessarily the interest rate is probably going to be the same on the purchase. As Sean can speak to, the purchase rate on a flip, if it's a hard money, right, versus something like that. But I think it's all about the after repair value that makes a difference of whether or not you want to, flip it in 6 months or hold on to it. Hard money, you usually have to pay it off within 6 months, a year tops.
Yeah.
Okay.
And you're gonna pay for that.
He wants to know what type of HELOC, Sean.
He was right. That was in reference to the type of HELOC.
I'm sorry.
So he just dropped in the comments that that question was about the type of HELOC.
Oh, okay.
So was a Sean question.
Okay, sorry about that. Yeah. So if you were to get a HELOC from somewhere else to purchase a flip, is that the question?
Yeah, so I think he wants to. He's trying to figure out what's the best HELOC if he wants to purchase something and then flip it.
Flip it in 3 to 6 months.
Yeah. So if you have a relationship with your bank, okay, it may be more beneficial to go to your bank and say, hey, look, I need a personal line of credit because your money's already in there. You may have a credit card with them. You're paying your bills through them.
Right.
Okay. So that can be a lot easier for you to do it. Now, if you talk about buying a flip, I know a lot about that. when you go to your hard money lenders, they're going to give you 12, 13% interest only anyway. Okay. Now, but it could be cheaper fee-wise to go to your bank to get that line of credit. I'm almost 100% certain it is. Because as you know, if you go to get to a hard money lender, they're going to charge you 3 to 6 points.
Right.
A point is a percentage of the loan amount. Okay. Where if you're able to go to your bank for a line of credit, it won't be that much. It'll be cheaper.
Makes sense.
So, yeah. So to answer the question, the best HELOC for that, I would say go to your bank, inquire there first, start there, and then work your way down.
Then work your way down. Okay, makes sense. So I hope that answers your question, G. Great question as always.
Great
question. I want to go ahead and holler at look. Here's my personal, barber and groomsman. Takes care of the look. My man AJ, the barber. Thanks for joining us tonight, man. But he had a question for Cliff. His question is: can bundling your life, car, business, and home insurance a possibility for saving that cash?
A possibility? Absolutely. Definitely saving cash? Absolutely. Here's where it twists up, like right now in the stage of insurance where we're at. So with your average insurance company, your big names out there, right? Your Allstates, your Geico's, your State Farms, all those big companies that will offer all three products at one time will give you a great bundle, will give you a great discount. But now what's happening is in certain states, some of those companies are pulling out of home insurance products, right? Okay. For example, Florida, California. Okay, so what do you do in that aspect when you still want to take advantage of a bundled discount? Now you have some insurance companies that offer auto and home or auto and life, and the home product you will have to get from another insurance company because it's not accepted in your area. That one insurance company that used to offer all three, auto, life, and home, you can't get that no more because they bailed out due to so many claims and risks. They got to gather up their profits back, right? Wow. So now there's other insurance companies that just simply ask, do they have auto, home, or life with another carrier under your brokerage? This is where it's real important to start looking into your brokers instead of just going online or calling in to an 800 number, because your broker like myself is going to do the due diligence and really search through all the different avenues to really max out your discounts. Okay? And along with that, where discounts is also coming from is your smart devices now, right? You're getting big devices for having your alarm system, your smart thermostat, for having your smart water rater that they monitor your hot water and your cold water. They're now smart devices for that because we're in 2024, and they're giving you discounts to that as well. So you really want to look at a whole conglomerate of how can you maximize your discounts, and definitely ask your broker. Definitely you could call me, and I'll break down how to maximize all of it.
Man, ooh, that's great stuff. So G has another point here. So he has a friend who's upside down with her vehicle. She owes about $12,000 or more than what it's actually worth. Now she's considering a voluntary repo and then buy a home in 2 to 3 years. Now, will that repo keep her from buying a home if that's the only negative mark on her credit?
Go
ahead, Chris.
This is Sean. I just want to say, Dame, thank you for having us on. I mean, we live for this, right?
Yeah.
I mean, these are just some absolutely fantastic questions. So, thank you for having us on. Sean, I'll let you take that one away.
Okay, we can tag team it. Okay, so basically, when you come to fill out an application to buy your home, you pull your credit, and boom, you see this on here. Okay, well, I'm gonna say, ma'am, what is this balance? Is this still out there? She's gonna say, well, I did a voluntary repossession. So now the next question is, do you know if they have sold that car? Okay, because if they have sold that car for $12,000, we just need a letter, and we can get that off your credit report. But if they sold it for $7,000, that's a $5,000 gap. Now, Cliff can tell you if they have gap insurance, boom. If not, we either have to have a payment plan in place, or you have to pay it off by the time we go to closing. So there are options. Okay.
Oh, wow.
Yeah, let me piggyback.
Go ahead.
As an insurance agent, right?
Yes, sir.
If you're going to do a voluntary repo, because this I have seen, please, you're going to do it, right? So you're preparing yourself for them to come pick up your car. Please, please, please take those license plates. Okay? Because when you turn in a car, you want to turn in those license plates. So therefore, you will not have to have insurance. If you have license plates on your car, the DMV wants to see some insurance coverage.
Wow.
And you could tell them all day, I did a voluntary repossession. They're going to say, all right, where's your plates at? You didn't turn them in.
That's big, Cliff.
And then they're going to say, well, I voluntarily did it about 2 months ago. Then they're going to get out the calculator. Go, okay, $15 a day.
What?
Wow.
Now you're going to get a bill. So now you got even more debt that you got to clear up along with that voluntary, and you're trying to get a house. So just be smart and take your time when you make these decisions and make sure you dot your I's and cross all your T's.
That's why Chris is telling folks out here, even if it's a year from now, you want to get that handled today.
Right.
You want to wait 30 days out to then deal with it.
Right.
Because the result's not going to be good.
No,
you want
not
good
at all.
results. You know, so if you know it's going to happen, let's start today. So in 6 months, we're ready to go.
Yeah.
Look here, ladies and gentlemen.
And
go ahead, Chris.
If I can, just talk real quick, Sean, about those specific instances where people want to start even earlier, right? Mm-hmm. Self-employed people, right?
Yes.
If you've had a hiccup as far as your taxes, right? If you've had hiccups as far as child support and things like that, just if you have any of those situations, if you have a small, we like to call it a side hustle, right? Start as early as possible. And if you have a small company, we all like great tax returns. Don't unnecessarily write your business to a loss, right? I'll let Sean explain to you. But if you have a business and you write it, if you have a side business, you have a regular job, and you write your side business to a loss of $20,000, the underwriter goes, well, you had to keep that business running with some money, so you must have pulled it from your regular income, and they'll actually reduce your qualifying income, right, Sean?
Absolutely. So that's big, guys. I know a lot of people, like Chris is saying, they want to use that as a vehicle to lessen their tax debt, right? That's great, unless you're really trying to buy a house or buy a big purchase item, big ticket item, because he's right. If you write that down, I've got clients that, they make $1 million a year on their P&Ls, but they write everything off down to $20,000. And they don't understand why I make this money. Why can't I buy it? Because they look at line 21, okay, on your schedule. That's the bottom line, which you are claiming, which you're paying taxes on, okay? So, but here's the silver lining. If you are that person that can't go the full documentation way, we have bank statement programs, okay? What does that mean, Sean? A bank statement program is if you're self-employed, you're putting your money in the bank every month, okay? So the underwriters will take 12 months of your bank statements, okay? Now, remember, it's got to be deposits from your job. It can't be your mom or your brother giving you money. They're not counting that. It's got to be deposits that are from your work. And they will do a 50% cut, like a haircut, I call it, for taxes. And they'll qualify you on just that.
Wow.
Okay. So again, get me your tax returns, your W-2s, and then I will advise you. I'll get with my team, say, hey, look, this is way they're going to be able to get qualified. We can't use the tax returns. We get bank statements. And so we know when we go out, there's no failure.
Right.
Gems, he's dropping.
Cool, man. Look, I'm telling you, ladies and gentlemen, look, I appreciate you all, here in the comments, being here. I appreciate all of you in the woods. Please, if you're watching and you have something that you want to ask, take advantage of this opportunity. Right now you are getting gems for free. These gentlemen, man, they're thorough. They are on point. And I want to go back to one question that, we didn't get to ask, and this is for Sean, from my man AJ, the barber. With all these runs on banks, what can one look for in a bank that has the best chance of protecting our money?
Okay. So let me first say I'm a mortgage broker. Okay. You're talking more of an FDIC, Bank of America type bank.
Okay.
I have, all I can give you is my opinion. I'm Navy Federal, right? So
Okay.
I can only give you my personal opinion, but I'm not really. All I know is they have to have $250,000 insurance, right? I think we all kind of know that. Other than that, I really can't speak on that.
Okay.
I could give them
Okay. Go
a
ahead.
tip on the insurance side. Okay.
Okay.
I preach a lot that life insurance is the biggest cheat code to wealth.
Okay.
All right. And when you have time, AJ, let's talk about it. I could actually give you some advice on how you could be your own bank. Right? Borrow from yourself, pay yourself back with interest. Okay. So you're not giving it away. You're taking it from yourself, giving it back to yourself, and you build it. Let's become our own banks from 2024 and on. All right. Instead of just paying their hide to these companies. And there's certain policies that you can, I'm not saying using the word investment. I'm not no financial advisor or accountant like that. All I could tell you about is how to work your life insurance plans that will help you gain a cash value as you get older. All right. And you could borrow from within a 6 to 12 month time period. No more. You have to wait 3 to 4 years.
Wow.
Your own bank is definitely the way.
Yeah, like I said, man,
Sign me up.
Sign me up. So I'm gonna go real quick. G Ware had another question. He said, he's asking how quickly can you close a VA and a conventional loan?
Okay, that's a great question. Now, me being a mortgage broker, okay, I work with a lot of different wholesale lenders. Okay, so everybody doesn't fit. Okay, a 620 is not the same as a 750 when it comes to underwriting because there's more risk.
Right.
Okay. But generally, I can close a loan in 14 days, right? I can close it in 3 weeks. You know what I mean? So it all depends. So that's why Chris will maybe want to elaborate how when we bring a file in, we do all of the heavy lifting up front. I'm asking for everything. Stuff I don't even need, I'm asking for it. So when we do submit, it's going through smooth. 48 hours, we have an approval. Appraisal's ordered. You have that back in the week. We're closing in 10 days, 15 days, 20 days.
Right.
So yes, so VA or convention doesn't matter. If you're well prepared, like you will be working with us, you'll close way less than 30 days.
Hey, dang.
Yes.
Sean closed my home within 20 days, 22 days to be exact, during the Christmas holiday.
Wow.
Yeah.
During
I had a borrower like him who was when I say, hey, Cliff, I need this. I had it. Before I said this, it was there. That's key.
I will agree with you on what you said though. Preparation. I at the time when I was buying, I didn't have you gentlemen, in that realm. But I will say, the person that we work with, same thing, was less than 14 days.
Right.
Soup to nuts. Right. Yep. It was done. So great point.
Sad thing is the average time from start to finish is 42 days nationwide.
Wow.
That's
really?
An eternity.
Wow.
Yeah. Sometimes who are those people?
Well, yeah. Well, definitely they're not y'all. And,
right. No. And the other thing that people don't talk about is this, which is why we talk about doing the heavy lifting up front, right? Why we talk about doing the full approval that we do versus pre-approval in this competitive market, right? You can have two offers side by side that are the same. And when that listing agent, if they're doing their job, calls and says, hey, is this an approval or is this a pre-approval? Oh, this is just a pre-approval. We just ran their credit, right? Versus when they call Sean, oh, we have a full approval. Oh, we've already been to underwriting. All we need is an appraisal, right? Appraisal and a CD, right? That puts you in a better competitive edge. So that's the other important thing about doing this heavy lifting up front, getting approved early, because inventory is not going to go up quite a bit soon. It's still going to stay competitive, so you need every chance you got. So that's why we like to do that.
Yes,
understood, very understood. So want to go back to Gerard, and Gerard, don't worry, hey man, keep them coming, man. Look, it's great questions, and I think probably some people are probably thinking about it, and I appreciate you taking time to ask these questions. His question is, would you agree, that lenders of new construction communities generally offer better loan products than other lenders? And I say Sean already, he was out the gate. He was already, that was like, nah. Go ahead,
okay.
Sean.
I'll answer it from a lender, and then I'll let Chris, you guys piggyback on that because he does a lot of new construction stuff. No, they're not. Okay, as a matter of fact, they're more restricted. Okay, Chris can tell you, there's a lot of times, hey, Sean, I'm going to take this person here because they have to, because they're offering X, Y, Z. They're offering money, closing costs that we don't offer, right? Well, but they're not going to close you because you have a blemish on your credit. And once you have that blemish, they're going to say, no, we can't do it. Okay, they're very conservative. Okay, so they don't have the programs. So if you go under self-employed and your taxes are written off, they don't have the bank statement programs. They're vanilla cookie cutter. Wow. Okay, so to answer the question, no, they don't.
Yeah, I'm going to want to piggyback, Chris. You want to piggyback on that?
Absolutely. And to Sean's point, most of these builder lenders, they're direct lenders, right? So, again, they're beholden to that. Now, in some smaller builders do not have their own lending leg, so they will use a local lender. So I think a lot of times people believe that is because there's an incentive offered, right? Mm-hmm. That's why they think they're better loan product, but I can't see that overall. And Sean and I, we had a client one time, the builder said they could do it. We get down the road, then they said they couldn't do it. Sean worked the loan and said, "Hey, Chris, it's going to be a tough one. Let it work." That buyer took it to 13 other lenders, right? Couldn't get it done, but Sean did. So, I think it's always case by case, but I definitely wouldn't say as a blanket builder lenders offer the best product. I will tell you this: the appraisals always come in at price, though.
That's going to happen.
And on top of that, you get the best insurance home rate on the bill.
Good
really?
enough.
Yeah, if you want to save some money on your home insurance, those new bills, you get the best rate, right? Because everything is new.
Wow.
Okay, everything is new. So
new roof,
right. So now you're getting that new roof discount. You're getting that new plumbing and heating discount. You're getting that new electric discount right off the top. Wow. So on the insurance side, it's definitely a win. It's definitely a win.
Interesting. So, G-Way, one more question for you, Cliff.
We need our super producer.
Look, for y'all don't know, man, like G-Ware, man, is a super dope cat, man. He, like I said, he's part of the Mogul TV global family. He has his own show, The Floor Is Yours podcast, man. He does great work. He's a very inquisitive gentleman, man. He has a great show. So I appreciate him rocking with me tonight. You know what I'm saying? So, he's asking, can you beat, USAA?
Man, somebody used to ask me that before 2023. I would just start running. I would just probably just hit leave meeting or leave the show right now. But there's nothing I could do with it. But now, I don't know what happened. I'm so sorry, USAA. But yes, now I am destroying their rates. It's all about the new rates that's going on right now. You know what I mean? Where USAA was probably has a lot of their coverages. Maybe they took some losses, right? That they had to raise their rates. But for right now, yes, I am USAA. And the way that things are going, now I got so many options. Okay. Before I only had like 3 options I had to compare to USAA. But if I got 22, yeah, I'm guaranteed that somebody's going to be.
I will tell you as a person who is a USAA member, and my kids, I think they had USAA numbers before they had Social Security cards. I don't have. Cliff has my stuff. I don't have any of my stuff.
Mine too. He got mine too. And I saw a shout out there from Miss Deborah, our super producer.
And that's what I said. I wanted to definitely go back. I want to make sure I shout out, CSC podcast team, their super producer, Deborah. Deborah, how you doing this evening? Thank you for being here. Big round of applause. Want to give her some credit, for keeping these 3 in line. I know that's a job within itself.
She yells at us, and then go gets us protein shakes. That's our super producer.
Hey, Twan, man, I appreciate you, man. Definitely awesome. Thank you, gentlemen, for providing information, that we always don't get, to level up our community, man. Salute to you, man. Hashtag 2micsup. Love it, man. Great combo. Yes, Linda, thank you for joining. Yes, so informative And look, ladies
Thank
and
you,
gentlemen,
Linda.
we got a few minutes left in here. So, if you have any other questions, make sure you ask them before we close out. Yep, we're gonna make sure, Jennifer, that we get the contact info. We're gonna put it, we're gonna let them drop it. But you know where to call, you know where to get it. I'll make sure you get it, sis. I got you. I want to make sure, I know you're moving on. We're gonna get you the information ASAP. Yes, G, thank you.
And
I
Antoine,
appreciate
a good point, Dame. For the community, right? That's what got me to really fall in love with what I'm doing. Reaching out to, I started rough. I attended my target was the young people, right? And all young people have high rates. Okay, they start out with high rates, but if you educate them now, by the time they get older, the insurance will start being a lot easier.
Man.
It would be less lapse and less claims that be made. I have young gentlemen that tell me, I have young customers, and it's weird because sometimes my wife will get emotional about it because she's been working with me, and you hear some young ones be like, listen, I thank you for all this insight because this is my first time buying a car, or this is my first time buying a home, and I really had no guidance towards this. My family rented a long time, so I'm really the first one that's actually buying. So when I hear that what lets me know that I'm taking care of the right people, and I'm gonna keep on going doing that as well.
So Linda drops in the chat. She wanted to know, Sean, Cliff, do you work with South Carolina residents?
That's one of our own, Miss Beck.
Right.
So in about 2 more, I've been waiting on South Carolina for the longest. They was not appointing new appointments from what I was trying to get, but they lifted it, and I should have it in about 2 weeks because I have some other people's out there that's requesting it as well.
Okay.
Soon come.
Soon come.
Hey,
I
Miss
love
Beck,
it.
thank you for reaching out.
I love it. So look, we've been rocking and rolling, amazing audience tonight. I just want to know, we could probably go on and on and on. But yeah, we can go on and on and on. But I do want to ask a couple of additional questions.
Sure.
And I think we're talking about insurance. And one of the things I want to talk about, what type of coverages are typically, included, Cliff, in a home insurance policy?
Some of the standard ones is, like I mentioned in the beginning of the show, your replacement costs.
Okay.
All right. That's very important. That's something that you want to make sure that you have the amount that fits you, right? Not the insurance broker, not the mortgage lender, what fits you. Now, we got to meet that closing deadline, so don't try to get too aggressive because you want to go to closing. After you go to closing, we could always talk about adjusting coverages here, later on down the line, lowering some coverages there that fit your need. That's one. Personal liability, okay? Personal liability, you see your coverages will say $100,000, $200,000, $300,000. That means that if somebody's at your house, falls, hurts themselves, they can sue you for being on, because they're on your property. So you got to say to yourself, how much guests do I have? How much, how many people do I allow, in my property throughout the year? Honestly, for me personally, the average is about 300,000, right?
Right.
But when rates was high, I was like, listen, it's just me, my wife, and my son. I don't really, I bought into the house. I probably just need about 200,000 right now because a lot of people's not coming to my house.
Right.
Then once you get settled in, CSC blows up. People want to come in, throwing gatherings and stuff like that. You're like, I got to raise this personal profitability up because a lot of people starting to come through. I'm starting to hold a lot more parties and gatherings. Somebody heard this. So that's the second one. The other one is loss of use. That's what a lot of people skip when they're reading over their home insurance. Loss of use amount is, God forbid, something wants to happen to your house and you have to go to a temporary home, stay in a temporary home, whether it's a hotel, Airbnb, whatever the case may be. You want to make sure you have enough coverage to cover that amount of you staying in a temporary home. Right. So just because it makes your rate cheaper at $50,000, well, if you get charged $300 a day and you got to be in there for the next 6 months, guess what? After 6 months, you're gonna have to call your uncle or your cousins,
somebody,
because you ran out of coverage. So make sure that loss of use amount is sufficient enough for you and affordable as well. And then last but not least, it's not standard because you have to add it on. It is an endorsement, but to me, it's a must, and that is water sewage backup. Okay,
That's
you have
big.
it in your basement because of your sewage. You mess up your walls. That is not a mandatory coverage, and that's what's for some companies is not mandatory. So please make sure that you have that coverage, and the pre-fill coverage that comes on it is about $5,000 to $10,000. So you have to figure out, okay, if I have a water sewage problem, my basement's flooded. If it's going to cost me $15,000, I got a $10,000 coverage. Am I good with coming out of my own pockets $5,000? If not, better up it. It. Those are some of the real important, and your deductibles. Play around with them up or down to see if that is feasible for you. I said last week that you can actually now with the rates, the higher you make your deductible, the lower your payments will come down. But some people be like, I don't want a $1,500 or $2,000 deductible if something happens. But guess what? Your boy got a company that you could get reimbursed for your deductible.
Man, come on. Man, come on.
You got him. You got him. And when I say all things insurance, I got you.
Ooh, boy. Man, look, serious stuff. So look, what G-Ware, he drops in the comments, he'd love to bring you guys on and talk more about the social and economic impact of home buying within minority communities.
Love to do that.
So I'm going to work with Gerard. I'm going to work with you, gentlemen. So one of the beauties, Gerard, and I've been working on this behind scenes quietly, so Two Mics Up has been offered an opportunity to start its own channel on the Mogul Global TV network. And this is one of those things where you feel like you're an agent. And my first signing, if you will, and my first reach out were to the three men sitting here before you. So Gerard, you will definitely work and connect, because these gentlemen are going to be hopefully prayerfully working with me before the year is out, and they will be joining, my new streaming channel. And they will be a part of the network. So G, they all part of the family, man. We all family. We're gonna make this work. I really want to see these gentlemen win, man. They are incredibly knowledgeable. They are incredible human beings, and I'm proud to be able to have them on and share this first look, if you will, with them and to you all. So exactly, G, man. This is dope.
Yeah.
We here for it. We're gonna make the connection, man. I'll get up with you and I'll get up with these gentlemen, and we will make that happen in the near future. All right. So before we go, I want to ask the real estate agent, because I do have, a question for Chris, right? And what do you see the industry looking like from a realtor's perspective, right?
Sure.
Because things are changing, like we had talked about, so fast. But you're already shaking your head. But what does it look like? Because I know we probably won't be back in the glory days, like you say. We don't want a pandemic. Yeah. But what do you forecast, and what do you see from your expertise? What can people really expect to see? Maybe 3 years from now, and how should they really plan? Whether it be we can go back to Sean with their finances and different things to prepare themselves moving forward and purchasing their first home.
I'll try to make this really short, but this is one of the great things about working with Cliff and Sean, is that both of our industries have undergone so many changes in the last 6 to 8 months, right? Mm-hmm. Clifton let us know about rising insurance rates long before it was mainstream, right? Mm-hmm. Sean has been on top of additional loan products. If rates have gone up, and as you guys know, there's been a lot of talk in the news about rulings in the real estate industry, how we're going to change representation and all that, right? So the short answer I'm going to say is, I'm very glad that we're in a country with one of the most robust economies, right? I want to allay people's fears about, a housing crisis like we had in 2007. I don't see that. We had just a multitude of things. It wasn't just the real estate market. It was rampant job loss. We don't have that. We're adding jobs. It's a robust economy. So to your point, I think we're going to continue to have a robust real estate market. Okay. I don't think real estate interest rates are going to retract very much in the next 6 to 12 months. Okay. I think inventory levels will stay tight, but it's going to be a healthy market. So I think if you're looking to buy in the next 2 to 3 years, maintain your credit, right? Pay your taxes as you can. If you have a tax state that's unsatisfied, at least get a payment plan, because that'll help Sean still be able to help you, right? And really start. It's never too early to start thinking about where you want to go, city wise, location wise, and price wise. I always do buyer and seller consultations. I think that's important because it helps people understand the industry, because how you bought a house 2 years ago is different than now. Just stay informed, right? And platforms like this will help, because this Washington, D.C. market is unlike any market in the world. Listen to your national news, but if you really want to know specifically what's going on here, I say honestly, listen to us, because we're here on the ground, and that makes the best sense. So no concerns about a crash. It will be challenging for some buyers, but there's all kinds of ways to work around that. Just stay informed, stay prepared. One of our good friends and fellow realtors, Nancy Alert, always likes to say, if you stay ready, you don't have to get ready. Right?
That's right.
So that's the truth.
I love it. G-Way, I'm not sure. I was out running around scuttlebutting today, so I don't know about. I didn't stay up with the Fed race today. I'm going to pray that they keep them the same and they do not increase. But I do like what Chris said. If you don't let it hinder you, right? If it's going to be what you're going to do, prepare for it, plan for it, and make it happen. And I think that's the biggest thing that you can do. Really with anything. So. Yeah. As we're coming to the back end, I have to ask, gentlemen, before we go, what is you got another question? Let me go back to this question. Do you gentlemen offer services in most states or just the DMV? And I'll start with Cliff, insurance.
I'm in the whole DMV, North Carolina, Texas, Florida, New York. For commercial, for my business owners, I'm actually nationwide. All right. So wherever you're at across the nation, when it comes to commercial, absolutely, I got you. As far as life, home, and auto, I'm in those states: New York, the whole DMV, North Carolina, Texas, and Florida.
I'm about to say, G, I think that worked for you, don't it? Yeah. I'm about to say, yeah, that worked for you, G. And what about you, Sean?
Okay, I'm licensed in the DMV, actually Maryland, Virginia, and Florida. And I'm going to give a shout out to Mrs. Beck. I need a compelling reason to be licensed in South Carolina. I know she's a realtor down there, so we can make that happen. But yeah, those are states I'm licensed in: Maryland, Florida, and Virginia.
And Chris is definitely last but not least.
Yeah, I'm licensed in Virginia, Maryland, but I have absolutely fantastic referral agents in Washington, D.C. So, don't let that keep you from reaching out to me. I can definitely put you in contact with somebody I know you'll be in good hands with.
Absolutely.
And that's what I want people to walk away with, no matter where you are. Even if you want to reach out to any one of these gentlemen, I am confident, and I am supremely confident that if they can't answer your question or help you, they can get you in contact with someone who can. So you use it as best, use it to your best advantage. And geez, I need someone licensed to do a HELOC in Mississippi.
You don't have to get licensed everywhere.
I know somebody down there.
Okay, see, here you go, G. So Sean, he got somebody for you down there. So we're gonna dot these I's and cross these T's and make these connects and make it happen. So as we close it, I want to ask, please, gentlemen, take a moment, because I know Thursday is your normal day for your show. So take a moment, talk about CSC podcast, where they can find you at, what time you guys are doing your thing, and what's coming next for you all with the podcast.
Take it, Chris.
Sure. So, so the next thing coming up, I think in the tail end of this season, we're really looking, just like yourself, bringing on more guests, right? Expanding that platform, being able to bring people information that they really want. It's been like watching a small baby learn how to walk, right? This week we're working on the sound and the location. Now it's the guest to kind of expand it. We're the experts in all things real estate and insurance and mortgages, but we want to bring other people in. So I think that's probably what's next for us. We talked in the very beginning about the more people we reach means the more people that we can empower. So that's really, I think, what we're looking forward to doing.
I love it. I love it. So tomorrow, what time? Like, give us some info. Give us some details. What days people can catch you? Time, where they can find you. You know, let's give all this information.
Okay, so all things real estate insurance, 12 noon every Thursday. Okay, our phone number, if you have questions after this, to reach us direct is 540-300-6277, and via email CSC all things real estate @gmail.com. That's a central location that we all get the information for, all the messages. So if I get it, something for Cliff, it goes to Cliff, Chris, like that. So that's a central location for you guys to reach us direct.
Give them that email one more time, Sean, for the people in the back.
CSC all things real estate @gmail.com.
Oh, we need Gmail.
Look, that's why Dame's a big brother. He's already got it in the chat.
Hey, let me say, I'm gonna go ahead. I'm gonna go ahead and make sure we get it right. CSC all things real estate
@gmail.com.
@gmail.com.
Yes, sir.
All right, we're gonna drop that in there because I want to make sure that everybody can go ahead and get at you guys.
And also, let me say this: Chris told me, Dame, that he's going to get it down to get that rap, the intro rap that you got going on.
Oh, he gonna get down. Hey, whenever he's ready, man. You know what I'm saying? Matter of fact, y'all should have sent me your music, man. So I could have did your intro on the joint tonight. I would have had no problem. You know what I'm saying?
Yeah, so Dave, you gotta hear him say your voice, man.
He got it down, doesn't he?
Hey,
CHRIS.
He was doing it. He got it down. Look, man, you gotta get that flow, man. That's
gotta
how
work on it. Gotta work on it.
Gotta work on it though. But look, I love it. So that's the phone number, ladies and gentlemen. Again, you can reach out to the team, the CSC team. They'll be go ahead and happy to give you a call, get your consultation, whatever you're going to do, and make sure you go ahead and you got any other questions, reach out to them. CSC all things real estate @gmail.com. Reach out to these guys, man. Really. Tonight was a great conversation.
Absolutely.
I really appreciate you, gentlemen. I appreciate you. I mean, we've already been kicking it as friends and partners, BNI and all of these other things. I'm honored to have you, officially, become part of not just Two Mics Up, but I haven't even dropped the name yet. And I'm going to drop the name. So ladies and gentlemen, stay close because, the channel name is going to be dropping, real soon as I finish up the paperwork. You know how it goes. Yes, sir. Much respect. It's always, G, I'm going to say it's great to see this type of representation. Our women in our community have been holding things down for such a long time. And this gives me no greater thrill than to be able to sit around greatness and 3 other men who look like me and that are doing phenomenal things. And we have to learn how to support each other. And this is my way of doing that. So, gentlemen, thank you so much. I am so—
It was an honor.
It's my pleasure. You know what I'm saying? So with that being said, ladies and gentlemen, want to run through a couple of things really quick. I want to make sure that, one, I shout out my sponsors because without them, couldn't be doing what we're doing here tonight. So stay tuned. I'm going to be right back after this short break. And we'll drop a little bit of other information for you. My ad not playing. Boop.
Nice.
All right. I don't know what's going on, but you know what it is with media. Sometimes it works and sometimes it don't. I'm just going to go ahead and let it go. But I do want to share, ladies and gentlemen. So we're going to be coming to you with some networking events. Two Mics Up. I like to persist with purpose. We're going to be doing this in person. I'm proud to say, TD3 Insurance Agency and TD3 Next Level Communication is going to be our partners in this mission. Clifton Durham has been doing his thing, man, since 2021. Proud to have him here. And now TD3 is bringing you the best quality beyond compare, top-notch service and support. I want you all with these. You're going to come out, connect, interact, and build and grow your business. Turn your professional aspirations into tangible progress. So make sure you don't miss this opportunity, as we're going to be bringing these, networking events, here to the DMV area. So stay tuned for that. Look forward to having you come out. It's Two Mics Up, ladies and gentlemen, season 6. Wow, that's a lot. Season 6 on the Mogul TV Global Network, the #1 network for positive programming. We have our numbers have grown, man. We in 40 plus countries, over 1 million subscribers. If you haven't already, make sure you go check it out. Don't forget, it's also allowed me to bring you Two Mics Up Business Corner Fridays, 1 p.m. on our YouTube channel here, LinkedIn, and X. Please continue to follow Two Mics Up across all social media at Two Mics Up. I am your humble host, Dave D, NYDC. For those who know me, Damon Cunningham. And as we close out tonight's amazing conversation, ladies and gentlemen, I'm going to ask you to do 3 things like we always do at the end of each and every show. May you stay safe, stay blessed. Mics out.
Love it.